Good evening and welcome to the DebtCircle Sundown brief for 6 July 2026. I'm Leela, bringing you today's key developments from India's debt and fixed income markets. Let's begin with the highest yielding corporate bonds traded today. Among listed corporate bonds, Unifin's Capital India topped the chart with an 18% yield, followed by Best Capital Services at 17.06% and Monedo Financial Services at 17%. IFL Finance and Akara Capital Advisors rounded out the top five, offering yields close to 16%. In the unlisted bond segment, Corona Realtors led the market with a 15% yield and trade volumes exceeding 25 crore rupees. Apex Homes followed at 14%, while Respo Financial Capital, Ramki Sustainability Solutions, and Navi Limited also featured among the highest yielding issuances. Moving to mutual fund activity, debt funds remain strong buyers today. Gross purchases stood at 18,467 crore rupees against sales of 12,951 crore rupees, resulting in a net investment of 5,516 crore rupees. Month-to-date debt fund investments have now crossed 13,246 crore rupees. Foreign portfolio investors continue to show confidence in Indian debt markets. Under the general limit category, FPs recorded a net inflow of 442 crore rupees today, while the fully accessible route attracted another 431 crore rupees. Calendar year inflows remain robust, with over 69,000 crore rupees invested across general limit and FAR categories. In the money market, overnight rates remain stable. Call money closed at 5.25%, while market repo rates hovered near 5.2%, reflecting comfortable liquidity conditions. Government bond yields were largely steady across the curve. The benchmark 10-year government security closed around 6.70%. The 30-year bond yield stood at 7.32%, indicating continued investor demand for longer duration assets. Treasury bill yields remain moderate, with the 91-day bill at 5.25%, the 182-day bill at 5.47%, and the 364-day bill at 5.66%. On liquidity conditions, the banking system continued to witness surplus liquidity. Net liquidity absorption stood at approximately 1.89 lakh crore rupees through the standing deposit facility, reflecting abundant cash within the financial system. Looking at interest rate expectations, the 1-year OIS closed at 5.75%, while the 5-year OIS stood at 6.16%, indicating expectations of stable policy rates over the medium term. In the currency market, the Indian rupee weakened slightly against the US dollar, closing at 95 rupees and 40 paise. The euro ended at 108 rupees and 94 paise, while the British pound traded at 127 rupees and 37 paise. Turning to commodities, gold remained stable at 14,662 rupees per 10 grams, while silver eased to 2,450 rupees per 10 grams. Crude oil traded near $71.61 per barrel. Indian equities ended the session higher. The Sensex gained over 520 points to close at 78,285, while the Nifty advanced to 24,430, supported by strength in financial and industrial stocks. In the primary debt market, several issuers tapped investors today. Notable issuances included Embassy KSL Realty Ventures with a coupon of 13.40%, Worthgage Finance at 13%, Z-Town India at 13%, and Growmore Finance at 12%. Power Finance Corporation also raised funds through a AAA-rated issuance, reflecting continued appetite for high-quality debt securities. Overall, today's market action highlighted strong demand for fixed income assets, healthy mutual fund inflows, stable government bond yields, and continued participation from foreign investors. That's all for today's DebtCircle Sundown brief. I'm Leela. Thank you for joining us, and we'll see you tomorrow with another comprehensive roundup of India's debt and capital markets.